In this presentation, we will use the Pay Bills feature to pay bills entered into the system in the past within QuickBooks Online. For more accounting information and accounting courses, visit our website at accountinginstruction.info. Here we are in our Get Great Guitars file. Let's take a look at our objective. We're going to do so by selecting the plus item up top, and we're going to be looking at the vendors section. What has happened at this point is we're saying that there has been a bill that has been entered into the system. A bill means that we're going to increase the accounts payable and increase, say, the expense or whatever the bill was made for. If we take a look at the bills, then we see it looks much like a check screen, except that it is a bill. The form is going to be a bill. The bill itself means that accounts payable is going up, a liability account, and the other side goes to whatever other account that we decide to enter into, oftentimes an expense account, utility expense, phone expense, whatever the bill is related to. Let's take a look at this by looking at the financial statements now. We're going to close this back out. We're going to go to the reports on the left side and go to our favorite financial statement report, that being the balance sheet. We'll go into the balance sheet. We'll change the dates up top to that current year we're working on, 01/19 to 12/31/19. That's January through December 2019. Run that report. Scrolling down to the liabilities section, first liability, accounts payable. We'll see that 15,000, there's 15,000, that means we owe 15,000 in a current liability relatively soon, most likely. If we select that item, we see it's just the beginning balance here. I'm going to change the dates back to the prior period so we can see the activity, changing the 19 to an 18, and run that report. And we'll see here's the 15,000, we'll see it was a bill that was entered. Now, this isn't a bill that we entered in the system as we went through. We entered it in as a beginning balance, something we owed this vendor, Epiphone, our major vendor we buy our inventory from, our guitars from, as of the beginning balance. QuickBooks, though, used a bill in order to do so because that's what QuickBooks does in order to increase an accounts payable account. When accounts payable goes up, in other words, it typically goes up because we entered a bill into the system. What we're going to do now is pay Epiphone, and we're going to pay off that bill. To do that, we will write a check, but we're going to use a special form that's going to be different than just the check form. In other words, if we select the plus item up top, we're not just going to write a check here. We're going to go to the Pay Bills feature. Notice that these two are going to be connected. The Pay Bills feature will be connected to our forms in that it will display as a separate form. Therefore, the form to write a check is actually a little bit different than the pay bills, even though they both result in a check being written, in a check decreasing the checking account. The pay bills will specifically be linked to the bills. The bills, remember, mean accounts payable went up. The pay bills mean that we're paying something off of accounts payable. We're paying something off from a bill that was entered in the past. The goal or the concept or the system that will usually be in place is that we will enter a bunch of bills into our system as they become due, and that will record the expense at the point in time that they have been incurred, not when we pay them. Then we will sort them out through the pay bill system, decide which bills need to be paid, and pay them in accordance with need as we go, and that will reduce the payable and record the reduction in cash at that time. So if we select the pay bills then, we're going to see the only item we have so far is that 15,000. So here's the 15,000 that we need to pay. If we had more bills in there, we'll see more bills in the future. As we see in the second month, we'll do more of an accrual-based accounting where we will enter bills and then pay off the bills. Then we would select more of these items. We'd see more of these bills and we'd sort them and see which bills we need to pay. The bigger a company is, the more likely this could be a full-time job, basically sorting the bills, entering the bills, and then deciding which bills are the most critical bills to pay. For smaller companies, we often may be more on a cash basis method because we don't have as many bills that we have to pay, so sorting them out is not as big a job. The overall process, the overall idea is the same. We're going to have the pay bills item up top. Notice that this will be a form within QuickBooks in that it's going to be something that will have a transaction related to it. QuickBooks uses this form to drive the debits and credits, to drive the two accounts that will be affected. When you see this form, then we want to think that accounts payable, the liability account that represents we owe people money, is going to be going down. That's what the pay bills mean. And the other side will almost always, typically, be the checking account. We're going to pay it with a check. So you can think of this basically on both sides. The accounts payable is going down. That's what the pay bill means. The other side is going to be, in essence, the checking account going down unless we choose some other form of payment. So the checking account is going to go down. We're going to say that the date on this is going to be 01/28/19. That's January 28th, 2019. The starting check will be the check number should generate for us in order, so we'll keep that check. If we got the full payment of the 15, we can just check off this Epiphone. It'll then have the full payment. If we paid something other than that full payment, we can put that amount here, whatever that may be. If it was $10,000, this is just an example. Then, of course, it'll have a remaining balance due on that original bill of the $15,000 minus the $10,000 or $5,000 still being owed after we apply out the $10,000. I'm going to put it back to the 15 for now. We will pay off the entire amount due. We are paying this once again with a check, so we could enter the checks into the system, print out the checks. They would be pre-numbered either way, or we might be just writing the checks by hand. We would still want to keep the check numbers in alignment with the external checks. As we generate this, it will generate a check, so we're going to select the drop up arrow down here. We have the save, save and close, and save and print. I'm going to go ahead and save and close, and then we'll return to our financial statements and see what happened to them. It should go back to our balance sheet. So if we scroll back up and go back to the balance sheet, if you have to recreate the balance sheet, remember January through December 2019, and then we could refresh it, although that is not necessary, I do not believe. If we scroll down to the liabilities, then we have the accounts payable now at 0, of course. Accounts payable now at 0. If we select it and use the auto zoom feature, we'll see the item, the beginning balance being the 15, and we'll see the pay bill underneath it, bringing the balance down to 0. We'll see the type of payment is going to be a pay bill. So notice it's a pay bill check. Well, what's the difference between that and a normal check? There is no difference from the bank's perspective. From a QuickBooks perspective, however, the pay bill gives a more specific meaning. It means we're paying off that accounts payable. So look for that. That's going to be helpful for us to basically track out how things are working, what types of transactions will be being used. If we select this item and then we go to the pay bill items, here's the pay bill items, the data entry form that we had used in order to enter this. I'm going to close this back out, and we're going to make another tab, and let's go back to the report first, back to the report summary. Now we'll take a look at an accounts payable summary report. To do so, we're going to add another tab so we can keep this balance sheet open by right-clicking at this tab up top and then going to the duplicate field. We're going to pull this tab to the right, so this one says balance sheet, so we're going to work on the other tab, generating another report. We'll go to the reports on the left side. Scrolling down through the reports, we're looking for money that we owe to. So not the business, not who owes you, not sales, it's what you owe us, what we owe as the business. Scrolling down here, we want to look at the detail, the vendor balance detail report. Remember that vendors are the people that we owe, so we're going to select the vendor balance detail. And then here is the report, and we'll see that there's nothing on it. Why? Because we paid off that $15,000 and therefore there's no balance due. That then of course ties out to what's on the balance sheet. So if we go back to the balance sheet over here, we have a 0 balance, and that of course is what is shown on the vendor balance detail. We don't owe anybody any money. That's great. If we want to see more detail than that, we'll go to the expenses tab on the left, and then we're going to go to the vendors up top. So we'll go to the vendors up top and we'll select the vendor that we are looking into, and that vendor is Epiphone. So if we select Epiphone, we'll get a detail of the transactions for Epiphone. We see that we have the bill here for that $15,000, and then we have this check paying off the bill. We also have this activity with the purchase order and the check payment on the purchase order as well for inventory at a later time. Current balance due is 0, as we could see up top. We can also see that if we go back to the detailed report, going back to the expenses, going back to the vendors, And scrolling down to Epiphone, we can see that we have a zero balance. And of course, we have a zero balance for everybody because we don't owe anybody at this time. Good news. For more accounting information and accounting courses, visit our website at accountinginstruction.info.